Federal Reserve, I think it's as divided as I've seen it in many years. We're hearing many Fed officials talk about, yes, we need to continue with the rate cuts. And then we're hearing some Fed officials say, well, inflation is in and around 3%. So I think we need to be on hold. The hardest part about all of this is that the government in the United States has been shut down for 40 plus days. Although today we are hopefully going to get the government reopened in the United States. We're going to see that once they take the final vote to reopen the government. And hopefully that will happen today. However, government's been shut. We have not seen, the Federal Reserve have not seen the economic data. What is that? The inflation data look like? What are jobs data look like? We do get some jobs data on the private side of things. Private payrolls have shown some weakness over the last little while in the United States. We've also seen a report out of Challenger showing, as I said off the top of the show earlier in the show, how much or how many jobs have been lost just in the month of October alone, largest number in over 20 years. So we're seeing job weakness. So we think. Fed thinks there is job weakness. But again, there's also inflation, higher costs to businesses, higher costs to the average person in the United States, higher costs to the average person living here in Canada as well. So what do central banks do when they have higher prices and a weakness in jobs? Well, that is the big question. We'll have to see what the Fed does, and they are definitely divided. We have a couple of quotes from Fed officials that will just show you how divided they are. Here you can see here our summary. Fed officials gear up for a rate cut debate ahead of the December meeting. I believe it's around the 10th. Musallam, who is our first Fed official from the St. Louis Fed. It's very important that we tread with caution here. I think there is limited room to ease policy further without policy becoming overly accommodative. I think we need to continue to lean against inflation. So he's looking more at inflation versus jobs. We go down the list a little bit here. Fed Governor Stephen Myron, who dissented in October in favor of bigger rate cuts. Now, keep in mind, Stephen Myron was the most recent appointee to the Fed by President Trump. So you can probably guess that he would want cuts. And he's been dissenting quite a bit the last few meetings, pushing for a 50 basis point cut, even though we've been getting just 25 basis point cuts. But he says, I would think the reasonable thing is incrementally more dovish than we were in September, the FOMC meeting, which again indicated 3 rate cuts. So he's hoping for some further rate cuts. He would love to see a 50-point cut, but I don't think that's in the cards. Our next chart here shows where the Fed funds rate is, and you can see that it is coming down 3 3/4 to 4%. Remember, in the U.S., it's actual range versus a one number. The Fed Watch tool, we have that as our next chart, and the likelihood that the Fed will cut. And remember, when the Fed cuts, the market likes that, and usually, if it's not priced in already into the markets, it is very favorable for the markets. Right now, our target rates sit at around, as I said, in the U.S., 3.75 to 4. Is it going to remain at that rate after December 10th meeting? Well, the odds are no. That there's right now about close to a 70% chance, I should say, that they will cut at least a quarter point this upcoming meeting. And going one step further into January, what are the odds that they will cut another quarter point? Sits at around just above 50%. What are the odds that they may, I guess, continue to cut further? You can see there about 30%, just under 30%. So looks like the Fed, at least the market believes that the Fed will continue to cut rates moving forward. I would love to see the Bank of Canada continue to cut rates as well, but both central banks have indicated at their most recent announcements or meetings that it's not a shoo-in, it's not a guarantee that either of them will cut at the December meeting, the last meeting for 2025. Right now, I understand why they may go on hold or on pause in the U.S., but I still believe the Bank of Canada needs to do what it can to create an environment here in our country, in Canada, that is conducive for business, that will lure business, foreign business, foreign investment to our country. And what better than to make interest rates low? Tax cut wouldn't hurt either, as I've said many times, but continue to cut interest rates both in Canada, and it looks like for now, the Fed looks to cut interest rates in the US as well.